Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis using the new Trading Desk website presented by Stockscores.com. I want to quickly highlight the website that you can go to use this tool. It's tradingdesk.stockscores.com. I've highlighted it at the top. And most of the tools that you'll see on here are free to use. In fact, all of the tools are free to use. We do have a interactive newsletter that is a subscription-based product, but if you would like to use some of the watch lists and charting tools of the Trading Desk, just give us a visit there at tradingdesk.stockscores.com. All right, let's get right to the analysis. This is a chart of the Dow Jones Industrial Average ETF, symbol DIA, and we've broken down over the last few days and really set up a falling top from the previous high. And that's not too out of the ordinary given that the market just recently broke that downward trend line. It's a real difficult call to make right now. Is this the start of a more substantial downward trend, or is it simply a pullback after a break of that downward trend line? So if we consider that the break of the downward trend line, maybe we pull back a little bit here before going higher. I think the market is very uncertain right now. I lean toward this being simply a pullback in a longer term reversal of that downward weakness that started at the end of April. And I say that because the market on 3 occasions, in fact 4 occasions if you include the really rough day early in May, on 4 occasions the market has found support and bounced off of it. So my expectation is we may pull back for another day or two here, but ultimately we should start to cruise up towards longer term resistance where the market will probably get stuck and will ultimately spend some time going sideways. Now the US dollar has been strong of late. The Canadian dollar suffered of late, and that was largely because commodities like oil and gold had a little bit of selling pressure, particularly oil. And so we had this little breakdown in the Canadian dollar, but it's encouraging that today it managed to close above its open on a day when it gapped lower. So I think we'll probably see the Canadian dollar come into here over the next little while and ultimately trade in a longer term consolidation pattern, something like this. Not particularly great, but compared to other currencies in the world relative to the US dollar, the Canadian dollar looks pretty good. Now gold recently broke out of a little pennant pattern. You can see the breakout 4 or 5 days ago. We had a pretty sharp pullback 3 days ago, but I don't think that that has yet overcome the positive signal of the upside breakout. And so I think market is still optimistic about gold, and I expect gold more likely to go lower than higher. And it might be not a bad time to start looking at some gold stocks because that downward momentum in the last 3 or 4 days of selling pressure does seem to be abating. Now if we pull back so far that we get through this little floor here, then I'd be concerned. But for now, I'm not overly concerned, and I can zoom in on this here just to show you a little bit more detail. This is the support price right now. It's the point where the market stopped going down and started going up. I call that an inflection point. And it's really a place where the buyers took control of the market and led to that breakout from the pennant pattern. And if we break through support on that downside, then I'd be concerned. But for now, I think I remain optimistic on gold. Well, there are global concerns that the economy is slow around the world, and I think that led to the breakdown in oil, coupled with an increase in the US dollar. And we have a breakdown as of today from a rising wedge pattern, a pretty steep one, but that is a rather negative pattern. So I'm not optimistic on oil in the short term, and I would be cautious with oil-related stocks. When I look at chart patterns, I often like to consider what is the most recent important signal. And so here we had a downward trend, and that downward trend was broken, and that is the recent most important signal. Over the past 3 or 4 days, we have had a pullback, but it has not overcome that recent important signal, which was the trend line break. Until the market moves through support, I remain on the optimistic side of neutral, although certainly this market doesn't look great. But I do think that the selling pressure that we've seen over the last few days is likely to end soon, and we should resume that drive toward the old highs in the next little while. You can see a similar chart pattern in the S&P 500 ETF, symbol SPY. Again, the most important signal was that break of the downward trend line. Now, until the market breaks through this long-term support, I think, sure, we might see a little bit of weakness from here, but ultimately we're going to start working our way higher. And it may take some time, but that's probably what progresses through the summer. By the end of the summer, we should be somewhere near those highs, at which point the typical weakness that comes in the fall will probably lead to a pullback from that resistance level. If you're looking for a safe place to be, Canada is probably the place. When you consider this chart in terms of volatility relative to the US equity indexes, you can see this is a much better picture. Now, you have to be careful because in Canada, of course, you have a lot of energy stocks, a lot of gold stocks, and those stocks will move with their underlying commodity. But in general, the large cap Canadian stocks look pretty good, and you can find some safe places to hide some money if you need to in the large cap Canadian names. This is the US dollar index, and as I said, it has been rising for the last few days, and that probably contributed to the weakness in the stock market. But today it went lower after opening strong, and that's a real good signal that the US dollar is going to continue to work back towards its long-term upward trend line, which it is far above. Now, I have a rule which I say often: things that run away from their long-term trend lines typically come back to them. So I expect the US dollar index to pull back toward that trend line. That means strengthen the euro, and that probably helps the US stock markets end this 3 or 4 day run of weakness. Well, that concludes this week's Stockscores market analysis using the Stockscores Trading Desk. Remember, you can use it as well at tradingdesk.stockscores.com. And if you want to have a little bit of insight into what's coming along, this is the new homepage for Stockscores Analytics. In the weeks to come, I will be launching a new service where we will send out real-time trade alerts, real-time analysis. They'll all be wrapped up on this page, but you'll actually get those alerts to your email address or to your cell phone. That's coming very soon. Have a great week in the market and trade well.